Good now, revolutionaries, and welcome to the Rise Up Morning Show.
The Rise Up Morning Show.
I distinctly pause every time because I love the gong.
The gong is so good. It's like when I have my Market Watch episodes Monday night, there's a little
The sheep, yeah.
The sheep, for some reason, there's a sheep in the other. I just feel like, I feel like, oh God, what's the gentleman's name who made our stuff? The Brit. Keith. Thank you. Yes, Keith.
Yeah.
My apologies.
Shout out Keith.
Shout out to Keith.
The official jingle officer of Rise Up Media.
I don't know why that lamb is there, but I love it so much, and thank you for adding it. I appreciate it. Also, Alex, I'd like to congratulate you on a very good, nice, and warm intro right there. That was lovely. Hooray!
Huzzah.
Man's caffeinated.
The world is crumbling, but I have, I don't know.
A can-do attitude? General pessimism about the world, but the desire to continue moving forward, to advance human society and at least bring a few good people further along as you can before our time ends and we turn inevitably to dust.
Nailed it.
Hell yeah.
Yeah, I would like that on my tombstone.
That's gonna be a long tombstone. That's gonna be a thick boy.
Yeah, I mean, get it in there. If you got to drop the font size down a little bit. Anyway, yeah, Evan. right before we kicked off, Evan popped in just for a quick second to let us know that one of my personal least favorite TikTok scammers is, I guess, live. He's this older gentleman who has launched a number of failed products, and my suspicion, it's important that I say that this is a suspicion. This would be my guess, my best guess as to what's happening. He's launching kind of like meme coin after meme coin, and then they inevitably fail because of course they are. And then he feigns a hack and starts over. And the first time I saw it happen, it was the turnaround, dude. Will, it was so fast. He got hacked, and the liquidity just, so it rugged. Immediately, he's like, "Hey, sorry, got hacked. Don't worry, I learned what happened. I'm launching another one. Let's go, round 2." And you're muted.
Yeah. Sorry, I didn't want my keyboard to blow up everybody's ears because my keyboard sounds like the dropping of bombs upon Nagasaki and Hiroshima each time I touch a key.
Yeah, that's a morbid fucking reference, but
I just feel real cheery today. See, I'm wearing all black. Actually, it's a black shirt, black pants. So it's like the salt. The salt is of the Alex salt is just becoming of me. So I feel rather good and positive today. But I don't know. The Alex is flowing through me.
That's what I like to hear.
Yeah, baby.
I do like, so Bearded, do these businesses fail, or is that the model? No, that's the model.
That's the model.
Yeah.
That's the model.
That my suspicion, that I would allege, that I would speculate, is that he rugs his coins and then launches another one. And they all have some sort of like nonsense component to it, like carbon credits, or it's going to be this meme coin that he's launching on pump.fun is going to save the planet or something. And allegedly
you got to have the buzzwords in there, man.
Oh,
you got to have lofty expectations that the world's going to change in order to get people excited,
Yeah. Don't buy them. Don't buy them. It's greenery or green meme coin. And then it's like, I don't remember what he called round 2 after that one got hacked, but don't buy that shit.
Green again. Greener, greenest. And by green, it means I'm getting green because I take your crypto and turn it into dollars and put it in my bank account.
Yeah, don't do that. Don't do that. A quick test. If you here's a pro tip. If you're asking someone on social media for crypto, like a crypto question or crypto advice, do this side-by-side test. Ask them a question, see what the answer is. Ask ChatGPT the same question and see if it basically just gives you the same answer. Because when you're scrolling, and you can tell, like, the longer you read the way that like LLMs respond to you, and how they like build an answer, the big tells are like, if someone is making a video and they say like, it's not X, it's Y, that's from ChatGPT. Most people don't talk like that, but ChatGPT talks like that.
Yeah,
so
there are a
you
lot
can-
of people on TikTok lives who just have the live here and then their chat GPT here and then just read off answers.
Yeah.
And then there'll be like 100 or 200 people in that room. And it's just like, oh, sweet babies lambs being led to the slaughter.
Yeah, it's a problem. But
Sweet summer children.
Anyway, don't buy green meme coin or whatever version 2 is called. There's your morning advice. Well, we've got a pretty full day.
We do, and not a lot of time, so we got to get into it.
Not a lot of time, yeah. So we're going to be rounding out just a little after the top of the hour. Both of us, unfortunately, have some things to do, but I am very excited to let you guys know that officially we are less than 1 week before I'm done with the day job, and this is full time. So that's very exciting because next Wednesday will be day 1 of me not having anything else except for Rise Up on my plate. And
then we'll finally get some videos made by Alex.
Woo! Well, like you said today, I have today is
nope. Yeah, there it is.
There it is.
Nope, wrong one again. Sorry.
I envision it more like a
ooh, that's also good.
But no, I'll try to get one today because the first thing that we were going to talk about is some clarity advancements, and yet again, because this just happens every time anything happens with clarity,
it's really good for the people.
Yep. Yep. So breaking news: the U.S. government has come to our rescue.
Oh, like it always does.
And the newest advancements in this piece of legislation that we're all going to have to live under are good for consumers, and man, it's about to be great.
Yeah. Oh,
or wait, no, crap. Sorry. It's awful. It's bad. It's a corporate benefits package 2.0. It's really good for a few really big companies that are going to make so much money, and it limits your options and choices as a consumer. That's it. That was the one.
Okay. That tracks.
Yeah. Sorry, guys. Sorry.
Yeah. Damn.
So, Will, do you want to give us a quick overview? You had a great video covering pretty much the entire update, and then I'll get into the procedural stuff because that's where all the misinformation is.
Yeah, so the current draft of the Clarity Act that was just pushed forward after both sides of the aisle, crypto lobbyists and bank lobbyists. You thought I was going to say Republicans and Democrats. No. Ooh, you have your finger up, Alex?
Yeah, because that's not quite true. So,
okay.
Okay, a little bit of procedural first. Inside of the Senate, there are two committees that are dealing with this. They're the ones that are tasked with the oversight. One makes sense. It's the Senate Banking and Finance Committee. And then the other one doesn't make any sense. It's the Senate Agricultural Committee. Both of those committees have their own working draft of the bill. The Agricultural Committee has the farthest advanced version of this bill. The Banking Committee just went through that one and offered some changes. And so now that version, Banking Committee's version and Ag Committee's version, are going to go in together, and they're about to, and they will need to then agree on whether they can merge those two, or both of those committees need to literally go back and continue to do this back and forth kind of a thing.
Okay.
So there is still some way to go. And actually the most recent advancement coming out of the banking side is to the benefit of the banking lobby. They are clearly winning the back and forth between the crypto lobby and the banking lobby. This is just lobby for lobby. It has nothing to do with what's good for us. And so right now the banking lobby is a little bit ahead, but the crypto lobby is still reviewing that one, and it's not phenomenal. So we still have a little bit of back and forth to go. But the one that you're about to describe, the newest update that we got, is the newest version from the Senate Banking Committee.
Okay, appreciate the clarification there. That's why I like having you here, man. Whenever I talk about this stuff, because I know I'm never 100% right on the procedural operations impact of kind of what's going on. So the big thing here is that the ability to earn interest on stablecoins simply being held on Coinbase or Kraken, which if you were to do that, like you held a USDC on Coinbase or Kraken, you'd be earning something just by having it there, like 3% or maybe even as high as 4%, just being paid to you in interest. The banking lobby has, in this current version, this current draft, removed that. So you will not be able to earn interest simply by holding stablecoins on a centralized exchange. It is any stablecoins that are not being used cannot earn interest. So what that means is you can go and use your stablecoins or your cryptocurrency. This would also stop like automatic staking, most likely, interest being earned on Coinbase and Kraken as well. But this is focusing on stablecoins. So that will go away. And the reason why the banking lobby wants that to happen is because that would probably result in a lot of people running away from their checkings and savings accounts and going into stablecoins on centralized exchanges to get an easy 3 or 4%, which blows what you earn from a bank out of the water, unless you go to a high yield savings account, in which case you can still get your 3% or something like that. But a lot of people don't do that or know about it. So they wanted to get rid of that competition. So that is going to be gone and done with. But you can still take your stablecoins and go into the world of DeFi and go to solutions like a Morpho or a DeFi Carrot or whatever kind of lending solution or whatever, and go and earn even better interest, maybe like 6% or something. Now, this is a removal of current rights, if you will, or options might be a better word, for regular users, and it does not impact Coinbase, as an example, at all. It doesn't impact their ability to make money. In fact, they're going to make more money off of this, because now that they don't have to pay you or I interest on that stable coin, it's not like they don't still have the stable coins. They still do. Circle, also the issuer of USDC, it's not like the amount of stable coins they've had goes away. They are all still earning that interest. They're going to make more off of it because now they don't have to give you or I or Alex a cut. So their profit margins are actually going to increase that interest on stablecoins, because what backs stablecoins? Bonds. Bonds earn yield, and that yield is still being earned. So your Circle, your Kraken, your Coinbase, what have you, they're going to make more money off of this. And then the banks feel a little bit more protected. So it's a win-win for both of them. The only people who are losing are you and I. On the bright side, that will push more people to DeFi inevitably, which is the better scenario, but it does remove a really easy option for people. And some people don't feel a need or want to learn or are confused or intimidated by leaving a centralized exchange, getting a wallet, filling it with funds, using something like a Morpho, right? That's intimidating, and a lot of people just aren't going to do that. So it is going to severely limit the amount of people who have a better option available to them than their checkings and savings account. And it costs the banks and centralized exchanges nothing, which is why what's being taken away is being taken away from you and I.
Can you touch on a little? So there's several questions popping up just about Circle's stock, because obviously the stock crashed about over 20% yesterday.
Hell
which,
yeah, brother.
I mean, I saw, and thinking about the way that this is built, specifically looking at, from the corporate side, like you just said, Circle is poised to make more money this way.
And also,
in theory.
This gets rid of competition for Circle. Yeah. You can take a look at the stock and like, oh my God, they're down 20%. This Clarity Act is terrible for Circle. It's great for Circle. And from a technical analysis standpoint, I've been saying, hey, Circle's going to go back to $63, $65. We just got to wait for something to happen. And this is going to be that thing. Mm-hmm. And so the reason why this is good for Circle is, as I said before, this is going to increase the amount of revenue that they make because they don't have to give as much of a cut to people. Maybe all of that money will actually go to Coinbase, but still, it won't impact Circle's revenue in any way, shape, or form. Now, some people will say, well, less people will use stable coins. That doesn't matter in terms of Circle's ability to make money. Two things matter to Circle's ability to make money. How many stable coins are there? They can continue to issue them. They just have to buy bonds. They buy bonds, they issue stable coins, they earn more yield. That is the only thing. Adoption, actual usage of USDC does not matter, okay? The other thing that impacts Circle's revenue is rates. If rates get cut by the Fed, their revenue per bond goes down. If rates get hiked, it increases, okay? Those are the only two things that impact Circle's ability to make more or make less money, okay? So what does the Clarity Act also do? It removes competition. Because imagine a world where, centralized exchanges could still offer yield on stablecoins. You're probably going to have like maybe 3 or 4 or 5 or 6 options for stablecoins that maybe 2, 3 of them, 4 of them offer higher yield than USDC. Well, guess what? Now less people are using USDC, and there's more competition and more stablecoins are being offered, more people are using other stuff. And I know I said that it doesn't impact their revenue, but they still want increased adoption. They want to be the go-to stablecoin solution. right? They want to be adopted by all the traditional financial institutions and all that kind of stuff, expand their usage, expand their ability to issue out more USDC. So in the world where centralized exchanges cannot offer that yield to stablecoins being held in their platform, you're not going to have competition. There might be other stablecoins, but are you going to choose a new stablecoin that doesn't have as much liquidity with no material benefit to you? Or are you going to use the one that's accepted everywhere and that has a lot of liquidity? This has created a monopoly effect in the United States for USDC. So they are positioned to monopolize stablecoin adoption in the United States because of the Clarity Act, and their revenue will not be impacted negatively at all. If anything, it helps them make more money. So this dip we're seeing in Circle stock is absolutely a buying opportunity. And I do think we get to $65 before we find a bottom.
Yeah, you were mentioning there's a relatively significant gap somewhere down there. Where is that specifically? Is that at 65?
That is at $63. In fact, I will share my screen here for everybody. Give me just one moment. This is and I'll clean up this chart just a itsy bitsy bit just to make it a little cleaner. It is right here, exactly at $62.95. This gap right in here. I know. I'm looking at TikTok and it looks like we're on the high seas.
TikTok, I apologize, but I have a lot of things connected to my phone that I cannot unplug. So
see, I'm going to do my best here. Massive gap here. The other thing that's really interesting about that gap is that it is sitting right at this key line of resistance, which was something that we didn't really come down and test, but it is, this previous low here, this previous low here. We blew upwards, and now we're going to come down, fill this gap, retest this, hold that as support, and you have a bottom. That would be a perfect bottom for Circle. Sitting at $64, $65. Buying Circle stock below $70, in my personal opinion, will pay bigger dividends than Bitcoin will. Probably Ethereum and Solana as well. So I am looking to get a hefty bag of Circle stock in and around that range. Because again, they will monopolize this space and they will make more money than God.
Yeah, so let's speculate for a second. So you mentioned the competition angle here. I want to highlight something interesting about the banking committee's version of Clarity here. And so it's important to recognize that laws, and this is theoretical, this is almost never how it really works in the United States, especially recently. They just don't pass anything. In theory, what's supposed to happen when you pass a bill is that you write a framework language into law, and then it basically goes out into the world. Things happen, people do stuff, and then court cases start. And then precedent is established by the judicial system to then be applied on top of that law in the form of accepted legal precedent. Then amendments can happen based on what precedent ends up getting set. That's how it's supposed to work. So right now, there is some interesting language around this wherein the yield that Will is talking about being prohibited is sometimes referred to as being towards stablecoins and sometimes specified as being dollar-backed, which immediately made me think, okay, what do lawyers love? Loopholes. And immediately I'm thinking about stablecoins that are not dollar-backed, like PaxG, for example. And I wonder if Paxos has an opportunity here to basically get a more competitive edge to erode maybe some of the market share of the dollar-backed stablecoin like USDC. Now, notably, Paxos does have USDG, which has been gaining some ground, little bit by little bit. Kraken incentivizes USDG more so than USDC because Coinbase has a 50% rev share agreement with Circle for USDC generated revenue. So notably, it makes sense that Kraken wants a different stablecoin. But yeah, I don't know. That's just kind of I don't know. I've been chewing on that one for a minute. That we might see something there happen. Now, the other important carve out to recognize here is that this is passive yield. This is like for someone holding a balance, but there are carve outs for activity related rewards or usage rewards. And because that's not really super specific, that also feels like a thing that is going to end up in a lawsuit if the bill is passed in its current form, wherein then people would have to argue what does or does not constitute appropriate activity to justify earning a reward for a stablecoin. So like in theory, if you hold, USDC on an exchange account, and then you're also making a dollar cost average purchase of Bitcoin once a week, does that count as platform usage activity to qualify you for a loyalty-based reward system through the stablecoin that you're holding? Maybe. So that's another thing to kind of keep your eye on. It's hard to say at this point whether or not, I think it's genuinely hard to say whether or not carve-outs like this exist because someone is aware that this could be treated as a loophole versus someone is just like not really thinking about this all the way through as they're writing it or agreeing to whatever the lobbyists ask for. But I don't know, that's kind of where my head's at right now looking at this. So I guess we'll see.
Yeah. Hey, I do want to take a second here. This post here from Debbie needs to be addressed. I sent a note to you, Debbie, in the comment section over here on Facebook. Debbie here has said, so I've invested in XRP. I only have it on my Arculus card. Am I good just doing that? Or I saw the other day to put it in a trust.
Oh, yeah.
Do not do that. Anything that says you have to put your crypto in a trust is a scam. It is a scam attempt. You do not need to do it. You are totally fine. If you have crypto sitting on your hardware wallet, whether it is Arculus or another hardware wallet, we like Arculus here. They sponsor the show, but honestly, I think they're also a phenomenal product. I use them myself. On any hardware wallet, you are fine. You are done. You are good. Okay. You are storing your cryptocurrency as safely as possible. Anything that says you should connect or put your crypto in a trust or make sure your wallet is connected to Web3, those are scams. Do not do that.
Yeah. Trusts in and of themselves are obviously not scams. The problem here is that they are unnecessary for almost everybody in crypto, specifically and they don't necessarily function the way that you may have been led to believe that they function. Often when I see like trust related products hawked, especially on TikTok or other live streams, it would be in the sense that like, hey, the government's going to steal everything that you have. Hey, protect yourself from having to pay taxes, blah, 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 whatever. Now, another little important piece of context. I do have a trust, a personal one. It has a very lengthy name that irrevocable spendthrift, some non-discretionary, something, whatever. It was related to a business that I used to own, and it sort of still exists. I don't really use it. It technically like has some ownership. Like I have a bill of sale for several of my assets to like into that trust, but I still have to file taxes for my trust every single year. Even if I don't have any activity, it gets its own separate tax return. So you end up paying for that too. It really only makes sense in very specific scenarios. There are thresholds wherein, like if you had more than, I would say, multiple six figures of crypto specifically that you had like a specific plan for, it's really just 99% of the time not worth it. They're not free to set up. They are not necessarily free to maintain and manage. Oftentimes it requires having another accountant who's a little bit more specialized who like helps you keep an eye on it and stuff. So yeah, just be aware that is it's kind of like the massively, like AI generated, super inflated cost courses that people sell. It's like, you don't need to pay $2,000 for a basic level TA course, or, whatever people sell them for. I have no idea, but
I sell mine for $100 and even less if you're a premium member, because that's all you really should be paying for this kind of stuff. Because you can go get it for free. You can learn this stuff for free. It's just going to take, it took me years, but Yeah.
No, I mean, but that's kind of the idea. You're paying for like a specific time saver or a specific benefit. So perhaps the trust makes sense for you. Just like objectively look into it and maybe talk to an actual accountant. I'm not an accountant. And just see like, hey, this is how much I have. This is my plan. This is what I do with it. What structure makes the most sense? Should I even be thinking about this? Whatever. But yeah, good catch. Because oftentimes on social media, you see the trust sale swindle. it's a little different than like the, connect your wallet to Web3 scam, which is a straight scam. The trust thing is more just like kind of a grift because you probably don't need one and they just want to make you pay for it. So, okay.
Well, let's see. We have a few other things to go over as well, unless you feel like there's anything else we're missing about Clarity.
No, I really just wanted to hit where it was procedurally. And then, yeah, like you highlighted the potential opportunity here with Circle stock as a result, just because, they could theoretically really increase the amount of money that they're able to make from this. So, that's a good thing to note. Just
also remember, if there are rate hikes, because we are looking at maybe even having rate hikes later this year if things get worse, Circle again makes more money because if rates go up, they make more off of the bonds that back their stable coins. Just FYI. So if rates are even thought about maybe hiking, the markets will dip down more. And there's always something that benefits off of that. What could benefit off that? What would be a hedge against that market going down? Circle stock would be, because they will make more money. It's very interesting. A very interesting play.
There was one more question that we can touch on, and Evan actually prompted a highlight on this too. So Kraken specifically, right, has a Fed account and also a different, setup trajectory down the banking license route that they've gone with their Wyoming charter. Does this affect how Clarity touches them, or how they would have to comply, or what they're able to do or allowed to do? Great question. The short answer is no, not really. It does matter in a sense, but for the most part, like especially with the yield thing, it doesn't matter. The yield thing, they don't get an exemption or anything like that. And actually, it is important to note here too that their particular Fed account, their Fed access that they have, is limited in scope. It's like a tester. It's like a tester account. They've been given it for 1 year, and then provided it goes well, then you can talk about the expansion. But they don't. They're not able to like store assets there and then earn interest on them. Their particular allowance does not let them do that. So great question. There's some little subtle nuances. It's kind of more like a long-term play with this. Like it could help more in the future, but in general, as of right now, it doesn't like. It's important to note it does not give them a carve out. They don't have an exemption. They're not like allowed to give you interest because they have that account. Unfortunately.
Yeah. I also saw some people asking like, hey, what's a good wallet? For us, we recommend the Arculus wallet. There are a lot of good wallets out there. So do your research on which one's best for you. If you do a lot of trades on a desktop computer versus a lot of trades on a phone, or if what's most important to you is, I just want something simple to use, easy to use, secure, we would recommend Arculus wallet. But if you do more trades on desktop, maybe there's something like a Ledger or a Trezor that you would like as well. But the Arculus wallet is really good and easy to use. And we can offer you a discount as well using the code RUMS10. That is ARCU RUMS10. And I think we actually have, I think we got something here. One second. Ah, there it is. RUMS10. You can use that to get 10% off of your Arculus wallet. And once again, Arculus, thank you for sponsoring the show. So thank you so much.
There's a couple follow-up questions on Circle stock, and then we can move on. People curious about the setup for the long play, or any lofty price targets in the years in the future. Important to note here, anything price target wise, this is just a guess. Like it is impossible to say. But
yeah, I have no idea. All I can say is that there is a gap as high up. It's the only remaining gap on Circle's chart that is at $212. But like Circle will absolutely, unequivocally in my mind, make new all-time highs. Because right now, Circle is not in the S&P 500 in any way, shape, or form. It is an S&P 500 company. It is the single most revolutionary company in the financial ecosystem today. It will be an S&P 500 company, or it will get bought by one of the big financial companies, although I don't think they will, because I think they have lofty goals. And when that stock gets included in the S&P 500, which I do personally think will happen, it then gets included in S&P 500 funds. That is the expectations I have for Circle. I think Circle is a long-term play for many, many years. I'm happy to make shorter-term trades on it, something for like a handful of months, a couple of weeks or whatever. I'm happy swinging it, but I'm also going to be taking some and putting it and setting it to the side for the long term, because I really do personally think it will provide even better returns than Bitcoin, percentage-wise.
Yeah, a good little thing that I would just take a peek at too, if you're trying to kind of come up with maybe an internal target or something that you would be shooting for if you were trying to make a guess. I do always look at valuation. And right now, so Circle's revenue last year was almost $3 billion, if I remember, 2.5.
Yes, I would have to look. I would have to look it up again.
Bearded. I believe it was
Jamie.
I believe it was nearly 3 billion. It was 2.5 or something. Anyway, I can fact check it in a second. So I would compare that to their current market cap. Will, do you have that handy by any chance? The market cap of the company itself, or their
can get it for you. Also, I saw multiple questions of where do I buy it. I've been buying a Circle stock on Kraken, but Coinbase recently added stocks, so you should be able to buy Circle stock on Coinbase as well, and you can buy it on any traditional broker too.
Yeah. The place where I do own a little bit of it is through my Charles Schwab brokerage account for my Roth IRA, so you can do that there too.
So the market cap is 24.9 billion, so 25 billion.
Oh, wow. Okay, that's lower than I thought. So, well, I guess it did just bleed quite a bit.
It did just bleed 20%.
Yeah, okay, that makes more sense. So, nearly $3 billion in revenue to roughly a $20 billion valuation. I mean, dude, in this day and age, like for bleeding edge tech that is aggressively growing, especially at like a clockable rate like they are with ridiculous revenue. I mean, billions of dollars a year in a very short amount of time. That also absolutely inflates like the rate of valuation. Much above the like industry standard average of like 5 to 8. You're talking about like startups or like venture backed or tech focused with aggressive growth. That kind of stuff. I mean, you could be talking about 20, 30, 35 times annual revenue as like a respected valuation. Fun fact, plug your favorite cryptocurrency into that kind of equation and tell me what you come back with. How much revenue do they make in a year and what's their market cap? So I mean, theoretically, a lot of room to grow on that thing, especially if they keep their growth rate up.
Yeah, and also there were questions on what is the ticker for the stock of Circle. Is here on the screen is CRCL, and the company is called Circle Internet Group, which is a little bit of a weird name if you ask me for a stablecoin issuer, because it's like Circle Internet Group. I mean, I guess it's the money of the internet, so I suppose, but the ticker is right there, CRCL, if you are interested in taking a look at the chart or looking to buy some stocks. And again, I personally think Circle goes to about $65, $63 or so before potentially finding a bottom. So, take that for what it's worth.
On the subject of stablecoins, Will, I was curious if you saw this. See if I can pull the tweet up here. So this was from CoinDesk, but interesting. Oh, nice. It's actually going to load. Okay, here we go. There we go. Okay. So what the heck? Oh my God.
Hello, my honey. Hello, my darling.
Okay.
Perfect timing.
Thank you.
Yes, the Tether audit.
Yes, the Tether audit. Did you read this or did you see this?
I did. I made a video on it.
Of course you did. Okay, so maybe you can give me a little. Literally, I've gone as far as this tweet and then a Google to confirm. But
I did the same. And in the article that I read too, it is just, hey, you have one of the big four accounting firms, which is it's either KPMG, Deloitte, PwC, which is PricewaterhouseCoopers, and oh my God, who's the other one? When I made the video, I actually forgot PwC, and now I'm forgetting the other one, which I named in the video. But it's one of the big four accounting firms in the United States, aka henceforth, therefore, the world. And they have $184 billion market cap of Tether that is now officially being audited. And that's a big deal because there's been FUD about Tether for years, since like 2017, because they've never really done a truly legit audit. So everyone's like, what's actually backing it? This is going to be what causes crypto to melt down. Well, I haven't been worried about it because they've been one of the single largest buyers of bonds in the world compared to nation states. And now gold as well. Correct. So they got a shit ton of bonds. They got a shit ton of cash equivalents. They got a crap ton of gold. And now they're going to have an audit and prove to the world that they are an incredibly sound stable currency.
Yeah, it's worth noting that because of the capacity or like the amount of gold in their
Ernst
backing
Young.
assets.
Thank you. Ian Y. Ernst Young.
Oh, perfect. Oh yeah, there we go. Like Mike asks, do you think they'll pass the audit? They would not be going in for it if they weren't going to pass it.
Yeah, exactly. They will pass it with flying colors.
Yeah. Think about how much gold that company has purchased and think about what gold has done in the last couple of years.
Has it done well?
For like a split second, I was like, wait, is he a serious question?
Is he serious?
Yeah. If you've been living under a rock, gold is doing all right.
No, Alex, I am not serious.
Gold's doing okay.
Oh, okay.
Yeah. So
hey, it went down 30% in 7 days.
Dang it.
It's a meme coin. Gold's a scam.
Imagine.
So imagine it's all been a rug being set up over the course of the entire
5,000 years.
5,000 years. Who's benefiting from this? I don't know.
Who's the dev?
Who is the dev? God is the dev. This is why he created humanity so that he could rug them on his gold coin.
Here, I'm gonna close the screen share here, William. But yeah, so that was an interesting one. I did see a question following up about Circle asking if we think Ripple is going to buy it. No, absolutely not. Ripple will not buy Circle. First of all,
no.
That would be diabolical. There was like, do you remember that like nonsense back and forth where they were like making pretend bids to buy it?
Yeah.
Spoiler alert, Coinbase is already there. And you get one guess who's going to win. I guess I would leave it at that. It didn't happen then. It's not going to happen now. I don't even know if it can.
No.
A pretty significant, I mean, like I said, there's a 50% revenue share agreement with Coinbase between the two companies there.
Yeah, the only acquisition that would make sense would be Coinbase buying Circle, but
like more of it. Or
but the thing is like Circle is incentivized to not get bought by Coinbase so they don't become a Coinbase exclusive. They will make more money with USDC being proliferated everywhere because then they'll have more liquidity and henceforth therefore they could then buy more bonds and yada yada yada.
Yeah. Solana versus Circle, 5 to 6 year hold in that particular pairing in this little vacuum that we're framing the question. Circle.
Circle.
They're different animals.
There's also no competition. Like Solana is still competing against Ethereum, Hyperliquid. And the thing is, Circle will have zero. There's Tether. Like Circle is in position to create a monopoly. And Solana does not have that same opportunity. And also, Circle is a very small market cap, not in crypto, but in the traditional financial world, it is tiny. The opportunity on Circle and the amount of money that is available to flood into it is so much bigger on both of those than Solana as of right now in this current point in time. That, of course, can change.
Yeah. Interesting call out on the Hyperliquid too. Obviously, they're doing all right today. What's interesting, so something to keep in mind, and shout out to, oh my God, what's the full username? Feral Vix. If you know the full handle, please tag them in the comments. Just talking about the correlation between like oil spikes and Hyperliquid spikes, just because a tremendous amount of oil futures are traded on Hyperliquid as a platform. And actually at this point, more oil and precious metals are traded on Hyperliquid than crypto.
Yeah.
So Hyperliquid is poised just to continue to crush. They passed Tether as the most profitable company per employee pretty recently by a lot, like more than $110 million per year per employee, which is insane. And it's a small team. There are not very many people that work there.
No.
And just, oh my God, just
can you imagine their bonuses that they get? I imagine there are some bonuses there that are pretty hefty.
Yeah, I would imagine. So Sean Legend on TikTok says that Hyperliquid has a $10 billion market cap. How high can it go? So here's an interesting little thing. If we just go back in time a few seconds to what we were just saying about valuation. Okay.
That's the back in time sound.
What I'm about to say is technically, I guess, an opinion, but it's kind of also not. Hyperliquid, with a few exceptions that we can talk about in a second, is the most appropriately valued cryptocurrency on the planet. The ones that you can't really include in that are Bitcoin and meme coins. Meme coins, just because it's exclusively a vibe, it's made up. Who's to say what a fair valuation for something that is just nonsense and a vibey social experiment is? You can't really do that, so you got to exclude those. And then Bitcoin is special. But Hyperliquid, like with a company behind it that makes revenue, it's the most appropriately valued cryptocurrency. It's the only one that you could even potentially say is maybe undervalued. The only one. And I am including Ethereum. I am including Solana in that. There's some nuance there that's important to get into if we had like a longer conversation about it. But yeah, I mean, the short answer is, nobody knows what's going to happen to prices. There's a lot more to do than just fair valuation metrics that go into pricing a cryptocurrency, or the ebbs and flows, or, pumps and dumps and all that kind of stuff. But just from a number standpoint, Hyperliquid making more than $1 billion a year with their valuation at 10 billion is only a 10x over annual it's less than a 10x over annual revenue to their valuation, which in crypto land is insane. Because if you look at stuff like Ethereum, Solana, also lots of revenue for both of those, but we're talking about 100+ times annual revenue in their valuation. If you look at other companies and things that have tokens that basically make no revenue, we're talking about thousands of times their annual revenue with their valuation. So Hyperliquid at like 9 to 10 times is crazy.
Yeah. I want to point out, speaking of valuations, this was something I was looking up before, and I don't know why it took me so long, but just going back on Circle for a second. Last quarter, they made $770 million. So, they are on track for, the end of the year. Basically 3.2 billion is what they're on track for right now. And they keep making more money quarter after quarter. So, they're going to make over $3 billion in revenue
which
in
is
2026.
Which I did look it up. That's a growth of over five. If they hit that, that's over 500 million increase from the previous year.
Yeah, exactly. So something like a 20% increase in revenue year over year. You fucking kidding me? That's batshit crazy. That's like fucking Nvidia. And I know it's Nvidia. Shut up, all of you. I say Nvidia. It's those are like Nvidia numbers. Okay. We don't have too much more time, and a few other things we want to touch on as well. Let's have a quick conversation about prioritization. So I'd like to quickly show Bitcoin's chart. Yes. We can talk about rates as well. Is there anything else we want to get to in the last couple minutes here?
Yeah, I can rapid fire a couple quick questions. I see a couple good ones. Yeah. So I'll just flag these. Let me just flag these and write these down so I can let you guys know that I did see it.
Well, you flag them and write them down, and I can quickly show the Bitcoin chart here. And let me get my TikTok camera situated.
Yeah, if you can
just so you can get those questions and I can get both here. So let me share my screen for Bitcoin, because we're getting some long signals. We got them last night, and I took some positions in the market. So first of all, daily chart here for Bitcoin. We are still just ranging in this channel, trying to get a confirmed move. By confirmed move, I mean, hey, are we gonna break up out of this, or are we going to confirm a bearish breakout and head to $48,000, because that would be the target downwards. And actually, the folks on TikTok, here we go. There you go. Now the folks on TikTok can see. And so the first area of resistance that we have is $72,686, the 55-day exponential moving average. And the reason why I think we go up and test that first, and I think potentially get above it, is because we had two daily candles here that were bullish. This candle right here that took place on March 23rd got above the 12 and the 21-day exponential moving average. And then we got a confirmation that that's being held as support yesterday, March 24th, with this nice long wick right here, a daily candle close above both. We confirmed this as support, telling us that Bitcoin's going to go up and most likely test the next key exponential moving average, the 55 EMA, sitting at that 72.6K number. Now, I mentioned that there were long signals. Those long signals are on the 8-hour time frame. And they are, let me move my camera right here. These little green arrows, we are getting a crossover to bullish momentum on short-term timeframes. This is happening on the 8-hour, which means it's happening on the 4-hour, the 1-hour as well. These long signals. This is telling us that these exponential moving averages here, the 12, the 55, and the 21, will try to get Bitcoin to go up and maybe even test $74,000, the 200 EMA. That's very, very interesting. Now, zooming out a little bit more, back to the daily chart, back to the daily time frame. I'm going to simplify this chart here and let me condense things a little bit. This line, this tan line here, this is our bear market line that started all the way back in October. So this has been the line that has dictated and slammed us back down into bear markets. I personally think we are coming up and we're going to test this line. This line, if we were to go straight up, would be at $77.7 thousand. I don't think that's going to happen. But if we continue to range up and to the right, you know, this is basically 76 to 75. So $77 to $75,000 is where this line is. I think Bitcoin is working its way up to test this and then make a decision of, hey, do we get slammed down further, or can we get above this, hold it as support, and then actually start to work our way up and begin to test the 200-day exponential moving average, which is something we haven't done since November 12th, okay? And that is currently sitting at what is $85,000, right? That'd be the bullish scenario. If we can get above this line, hold it as support, we're potentially in the end of the bear market and starting to not enter a bull market. That is not how things work. Oh, wait, I was not sharing my screen here, was I?
Yeah, you were.
On TikTok. Oh, I was? Okay, wonderful. That is not the beginning of a bull market. That is the beginning of the consolidation market. Things don't go from bear to bull. They go from bear to consolidation to slowly grinding to then bull market, right? That's what typically happens. We'll see if that happens this time. But that's what we're looking at for Bitcoin. So again, key areas of resistance, you have 72,000 immediately, 74,000 after that. But I think the area we're really potentially working our way upwards to test before getting a big bearish rejection or maybe an opportunity to go into a bull market is between that $77,000 to $75,000 range. And that's where things will become very, very, very interesting. I would be super cautious at that level because the macro environment is super bad. So I would be expecting a rejection from there, but I do think we'll at the very least test it. So short term, I'm like, hey, we got a couple bullish candles. We're getting some long signals. Bitcoin might go up $3,000, $4,000 or so. Altcoins, there's some altcoins that are looking really, really nice. They could put up some decent numbers in the short term, but midterm, I would remain very, very, very cautious until Bitcoin, you know, breaks above that key line of resistance that we've had since November or October.
Good deal. Good review. I appreciate it.
Yeah.
Do you have anything else that you want to hit before we see how many rapid fires we can
yeah, you told me there are a bunch of people doing live TikToks being like, altcoins are about to erupt because of rate cuts. And I'm like, no, they might do well here in this short term, but they're like 2026 altcoin season is what they're saying because of rate cuts. Guys, the odds of rate cuts are super, super low this year because inflation's targets are going up to 5.2%. Let me quickly share the screen here. Hang on. No. Yes. So what we're looking at here, and Alex, if you can get a screen share, that'd be great, is we're looking at the Bloomberg terminal, and the 1-year forecast for inflation is for us to climb to 5.2% before the end of this year. And if inflation goes from where we are currently at like 2.6, 2.7% or so, wherever we're at, to 5.2%, we are not getting rate cuts. We are not going to get rate cuts in any way, shape, or form. In fact, you might get rate hikes, okay? That's why the crypto environment is, or not, the macro environment is really bad. And if we take a look at the Fed watch, here we go. The Fed watch, these are the odds of us getting rate cuts. There's 0% because rates are currently 350 to 375. There's a 95.9% chance we maintain rates, 0% chance of rate cuts in April, 4% chance of rate hikes. And then in June, Again, we are looking at an 11% chance of rate hikes, no chance at rate cuts. Go to July, we are looking at an 11% chance of rate hikes, 88% chance again of rates remaining the same. And then in September, a 20% chance of a rate hike. In September, 0% chance of rate cuts. October, once again, higher opportunity, higher chance of there being rate hikes. In December, maybe there's still a 6% chance being forecasted for rate cuts, but a 20% chance of there being rate hikes. And obviously the biggest here from now until December is the Fed keeps rates the same. And this website is the Fed Watch. It is the legitimate website to show the odds of rate cuts, rates remaining the same, and rate hikes. And you can catch that in real time. So anybody who says rate cuts are coming in 2026, they are not actually paying attention. They are just parroting whatever they heard from several months ago. And also altcoin seasons don't exist anymore while the ETF products are currently live. So that is also a sign that they're not unintentionally trying to like lead you down a bad path. They just aren't keeping up. Yeah, they might be. It opens up that door as a possibility that those people are maybe purposely trying to lead you down a bad path, but probably means that they're just not really keeping tabs on what is actually really going on in the macro environment. They're just parroting things that they heard a while ago and aren't keeping themselves educated. So it is either they're purposely trying to screw you over or it is negligence. So, you know, whichever one you decide is worse is whatever one you want to decide. But either way, point out to those people that they need to like, you know, keep tabs on some of this stuff or stop listening to them.
Yeah, no. Thank you for the analysis. I saw several of those live streams, even just yesterday, including one that literally was saying that rate cuts are impending because of the war, and
what?
And that will, yeah, literally the direct quote was, "The war will make them have to cut rates, and that will start altcoin season." And I was like, "Is this This might be satire. Like, this is so stupid that it might be a joke." But I have a feeling it wasn't.
God damn it!
I do want to highlight the point
that you just made about internet privileges for some people. Sorry, go ahead.
I know. So but on the subject of altcoin season, I wanted to highlight something that Emily talked about on trust issues last night, which is fantastic. It's basically she's talking about the programmatic nature of the way that cryptos are created now, in conjunction with the fact that, so again, back in time, last cycle, there were like 30,000 crypto. I'm not exaggerating. I think it was $32,000, $34,000 was like peak altcoin season. That's how many cryptocurrencies existed and were circulating worldwide. Okay. Now it's like almost 40 million, with nearly 1 million new ones being created every month. And they're being created differently than they used to be. It's programmatic. They're built specifically to do a thing now. You know, people are not keeping these things for very long. They are designed to extract. It's a completely different game. It simply cannot happen anymore. We have engineered the ability for all altcoins to just arbitrarily do explosive things, completely engineered that out of existence. It can't happen anymore. What you can have are isolated incidents, smaller, like, you know, pumps across the big stuff, you know, where like a rising tide lifts all of the boats up 10, 15, 20%, something like that. Or you could have an isolated runner where like something in an isolated little instance does really well. You could absolutely have that. Those are nearly impossible to guess or predict with like any amount of confidence or anything like that. So just please be careful. And if anyone is advertising like, hey, get in here, buy my thing, join my thing, do this, sign up for that, whatever, because altcoin season is about to start and you don't want to miss it, they're lying to you. They're not your teacher. Will, I've got a list. Here's the list, the rapid fire list. There's a question about taking profits.
Let's actually be rapid fire, because we do both have to get off.
And I will say, I will come to you first, and then I can finish a little bit longer if need be, just to make sure we get these. If you have any last minute questions that I can hit quickly, then please feel free to toss them in. So far, I have questions about profit taking, the potential for hyperliquid, an ask about the Western Union stablecoin announcement. This one was from earlier in the live. There was a ZBEC announcement in conjunction with Stellar. There was a question about trillions, or a comment rather, about trillions of dollars worth of RWA, real world assets, coming onto various blockchains. I think that is really misunderstood, and I wanted to highlight a couple things to think about with the RWA thing. Any limits to Circle's potential dominance or explosive growth? And then, are you still doing any Pengu stuff?
Bought Pengu yesterday.
There you go.
It was one of the coins that I bought yesterday as a short-term play. But okay, go start from the top. Let's fire through.
Okay, so profit taking, yes. Every time anything goes up, my personal threshold is anytime an asset that I'm holding increases by more than 10%, I take a little bit off the table. Great,
super simple strategy. Great way to make sure you make money in this space. Honestly, I love that strategy from you. I think it is the best way for people who don't have the time to become like a really serious trader, or maybe not the ability to just make sure you make money in this space.
Yeah, I don't make a tremendous amount, but I can tell you that my entire portfolio is green and has been for the entire cycle. I can tell you that I have made money on every single asset that I hold, which is not a very extensive list. And yeah, that's exactly what it is. I don't have the time to like sit and stare at a chart all the time. And these things just keep rotating and swinging. The macro picture is bad. There's so many things that, turn around and reverse every single pump that we get. So I've actually lowered that threshold to 10%. It used to be 20. But that's my simple rule. If something that I'm holding goes up 10%, I take at least a little bit off the table. Sometimes it's as much as half of the position. Sometimes it's as little as 10% of the position. And then if it falls by 10%, then I'll put a little bit right back in there, and I will end up owning more of the asset. And then I'll just keep doing that forever. And I only own like 4 things, so it's pretty easy to keep track of.
Mm-hmm.
Hyperliquid.
For me, the only thing I'll add is like there are some times where I trade, and I typically, when I trade and I sell something to take profit, I typically sell the whole position. There are 2 thoughts here. It's when you sell everything, you walk away and you find something else. Even if the asset keeps flying upwards, you just walk away, you made money, you won. Yep. Or you sell like 50% or 40% or 60%, whatever. Then you keep like a moon bag, if you will, in case it does keep riding upwards, and then you take profits along the way. Both strategies I think are good. It just depends on what your personal PTSD is. Mine is from previous bull bear runs in crypto is not selling enough. So I personally, my PTSD is riding bags up, writing them down, or riding them up and selling maybe only 20, 30% or so, and seeing it all fall down right afterwards, right? For the most part, from my 2017 first entrance into crypto, and then 2020 market too. I sold near the top in 2020, but not enough to the point where I was like, yeah, I really just like fucking killed it. I felt like I did well, but I didn't feel like I killed it. And so my PTSD is that. So I sell all of my bags, and then I go, hey, I take these profits, and even though the price keeps going up, hey, I have profits, and now they're in stable coins, and now I have a bigger bag of stable coins that are earning 4, 5, 6%, and I view that as a huge win. That's me personally.
Yeah, the follow-up was even if you just come back to your break-even point. So my threshold for purchase and sale percentages is different. At a time like this, when the market is really sketching me out and I don't feel confident in any pump or rally to last longer than a day or two before who just tweets something shitty and turns the whole thing around, is lower, which means that if I'm selling something into a profit, I might sell 15% of it. And then if it comes back down even to the break-even point and I want to swing back into it, I'll go back in with half of the amount that I took profits on and sold. So I'm selling more than I'm buying, and I'm ending up with an ever-increasing stack of stable coins, and then those stable coins get rotated into a yield farm. So all of my profits go into, at this point, USDC, which then gets parked in a farm, which starts earning interest and expanding the rate at which I'm growing that little pile. So it grows from 2 directions.
Alex, let's do one more question, and let's hold the rest for after dark tonight. We will be back tonight at 8 p.m. Eastern Standard Time, but I do have to get going, and I know you do as well. Okay. Yeah, the trillions and RWA thing I would like to save because it's a longer explanation. The bumper sticker for that is that it doesn't work that way, and people need to understand that there is a significant risk to this whole, I think RWA is very, very cool, but it's very misunderstood. So if you want to get ahead and do some homework before After Dark, research the idea of whether or not you can safely secure $1 trillion on a network that has an attack cost of 200 billion, and ask yourself if that really makes sense.
That's a great prompt for an LLM to give you a thing. Plug in the idea of a ripcord in RWA token issuers. There's some homework. Will, let's hit the circle dominance thing, just because we did cover it a lot today already. So I think we don't need to give the full story on it. So do you foresee any limits to Circle's dominance? Anything that you think could compete? We just talked about the Tether audit, which obviously Tether. Yep. So,
but the thing is I don't think Tether becomes a huge player in the United States still, because granted, USDC is now has had days where it surpasses Tether in terms of volume now, which is the first time ever. That's really started happening in the past few weeks. But the thing is Tether doesn't have the same inroads to financial institutions and future adoption of stablecoins as Circle does, because of their close relationship with Coinbase, and henceforth, therefore, BlackRock and Larry Fink. So Circle is still better positioned to monopolize over Tether. USDG is also interesting because with Circle, they just pay Coinbase. They give 50% of their revenue to Coinbase. With USDG, anyone who has USDG on their solution can earn interest off of that. And that means any DeFi application, any random solution out there that has USDG, they can also make money by having USDG. So you're gonna see an explosion of adoption of USDG because there's a financial incentive for decentralized applications to incorporate it. And yeah, so I think they're going to do well. And that company that issues them is called Paxos. But despite that, the liquidity difference between Circle and USDG right now is like $1 billion compared to $75 billion. So Circle is still in the dominant position.
Yeah, no, that's exactly where I was going to take it. I think that the opt for this particular audit is a sign that Tether is aware that they will probably not be king forever, and they're working on it. Not to knock Tether at all, they're still unbelievably profitable.
Oh yeah.
Like I said, they are firmly in second place behind Hyperliquid now. As of very recently, they were first for a long time of how much money they make per employee per year. They are gargantuan, and they're big elsewhere. I mean, Tron moves a tremendous amount of value for in Tether on its network in other places around the world. So it's important to keep that in mind too, that we see a different picture here in the US, but Circle is growing, USDC is growing more aggressively at this point. So I think the audit's an indication of the recognition of that.
Tether will be the king of the East, Circle and USDC will be the king of the West.
Yeah, I do think that, there's the potential for more issuers to launch something. The ability for them to steal market share at this point at the rate of growth that Circle is going on, and especially with the fact that Tether does still exist and is by all accounts doing fantastic, man, that's tough. That's a hard journey to embark on as a stablecoin issuer. I think that you would see more isolated instances wherein like the PayPal, the PYUSD stablecoin has some interesting yield opportunities, but it's much smaller, lower liquidity, lower volume, all that sort of stuff. I think that stays more like platform focused or like a specific deal with a PayPal partner or subsidiary or something like that. But yeah, good questions. Okay. We've got some good stuff to save for After Dark. We'll be back tonight at 8 p.m. Eastern Standard Time, 7 p.m. Central. With Nathan. Nathan's going to join us tonight, so we'll have some talks there, and we'll go through the rest of the questions.
DeFi Daddy.
Decentralized Father.
Decentralized Father.
Will, any last words as you head out the door?
Nothing else to add that we haven't already gone over. Good luck trading, everybody. We have some long signals here for crypto, but the macro environment is bad, so if you find yourself in some decent profits, take some.
Take them. All right, excellent. That is financial advice, by the way. Consider paying yourself if you find yourself in profit on a sketchy, volatile asset. That is financial advice. You can take that to the bank. All right, we got to go. We will see you guys tonight. Thanks, everyone, for being here. I appreciate you, and Evan will be back tonight as well, so we can all flame him for missing this morning. All right.
See you, everybody.
Bye.